So let's start with the today's session. Are you all excited for today's session? So we are going to study the technicals today. Okay, we are going to start with the basics, and within the next sessions, we are going to go with the advanced session, and I'll be giving you the proper setup. Okay, I'll not leave you in between. I'll give you the proper setup, how to analyze the price structure, how to analyze the price action, and then take some decisions based on the long or short. So we are all clear about the last sessions. I hope there are no much queries. Before investing in any coin, do we need to read the white paper? See, it's a choice, Divya. If you want to read it, you can, but we are right now more focused on intraday trading. So intraday trading, I told you, it's all about the the fundamental strong securities. I'll be giving you a watch list from myself, which I trade on a regular basis. So it won't be a very much tedious work for you to find out. However, if you are applying in ICOs or like we'll be discussing a little bit about ICO. What is ICO? It's just like an IPO. Okay, ICO is like an initial coin offer. It's just like when a new coin offered to the public, then it is known as the initial coin offering. So when you are participating in an ICO, because there is a huge capital investment when you do an ICO. It's not like IPO when you have a minimum investment. The minimum investment that you're required to do in an ICO is like $500 or $1,000 minimum. Okay, then only you are eligible to actually participate in ICOs. How to analyze the white paper information? You can, I'll make a more video on this because it's more fundamental. But more of points like you need to focus on white paper is thus like what is the technology, what is the platform they are based on, what is the problem this coin is solving on. Let's say there is a coin based on Ethereum network. Okay, let's say there is a coin which is based on Bitcoin network. Okay, so we do study a lot of things on certain parameters. Like when you're studying a company, okay, when you want to invest into a company, what do you think about a company? When you're investing into a company, you think about the financials of the company. How strong are the financials? What is the team? Who is the CEO? What is the problem? What is the business of the company, right? So such are the things that you analyze. These are the parameters that you analyze when you are investing into a company. Similar are the coins, okay, when we are investing into any coin. So you also look at the various parameters when you are deciding which crypto to invest in, like the team, okay, which is the team that has offered this coin. Let's say BNB coin. Do you anyone know about the BNB coin? Okay, it's a Binance coin. It is offered by the Binance software only. Okay, the Binance is one of the major platforms in the world for the crypto exchange. So BNB was a very good strong coin. Okay, it started at a very few prices, very less price, like around $1 something, and it traded around $216. So 200 times was the the return was available on the Binance. Okay, I'll just need to check the data. What is the current price? But yes, so there are some strong coins. Okay, there are some strong fundamental coins, but they are looked for basically around for the long term investing. Yes, right now it's 263 or 267. So when initially the Binance coin came, a lot of people invested in Binance coin because Binance was on the path of becoming one of the world's largest exchange. So right now the Binance has taken over the Coinbase. If you know the Coinbase, it was one of the largest crypto exchanges. Okay, it has also offered IPO in the US markets, Coinbase. Then recently Binance took it over as one of the largest crypto exchange because Coinbase has suffered. These exchanges have suffered a huge loss based on the devaluing of Bitcoin. Okay, so if you're reading the news on an everyday basis around the crypto world, you will be able to connect the dots. So the fundamental is majorly about connecting the dots. So once you understand what is the parameters, what are the normal parameters, okay, it's not very huge. Okay, do not take it as like there are so many parameters, there are so many things that I have to analyze. No, there are certain parameters. Just like think like an equity. Okay, when you are investing in any company, what are you looking at? You're looking at the business structure. You are looking at certain parameters, financials. Their ratios, financial ratios. Similarly, there are some parameters for the same cryptocurrency as well. But since it's an intraday trading internship, so we'll be focusing on intraday. Okay, I'll try to make more videos on YouTube for the same, for the fundamentals, so that you are able to know. Okay, so let's start with the today's internship. Today, welcome to all of you for the day 3 technical analysis. Can anyone answer what does the technical analysis answer for us? We know that the fundamental analysis answer what securities to actually what cryptocurrency to invest in. But what does the technical analysis answer? What question does it answer? Entry and exit. Okay, no, it does answer us when to buy or sell. Okay, the exact timing. Okay, so what is majorly based on the technical analysis is to find out the timing, the opportunity to actually buy or invest. Right. So once you know that certain security is going upside, okay, certain security is going to go increase in the future, but the price may not be, the price may not accept you. Price is right now in the downtrend movement. Okay, when the price is in downtrend movement, even if it is a strong fundamental security, will you buy it? My question is, even if there is a strong fundamental security, but the price of the same coin is decreasing on an everyday basis, will you buy it? No, right? So have thought in the mind that even after the fundamental analysis, your main 70% of your answers will be majorly given by the technical analysis. And even if you have no knowledge about the fundamental analysis, I'm telling you, there are so many, cryptocurrency traders, they have zero knowledge about the fundamentals, but they are so strong in technicals with the help of the stock market or the forex markets that they're able to generate a return of around about 20 to 30% every month based on technical analysis only. Okay, so we are going to focus on what these technical analysis, what is this technical analysis, how do we do such analysis, how do we ourselves will be able to know when to buy and when to sell. So first thing is about the holding period. Okay, so what is an holding period? Like when you're buying a financial instrument or a cryptocurrency, let's say I bought some bitcoins. Okay, I bought some bitcoins like equities or currencies. You might have planned earlier into some strategy and then process how much longer are you going to stay with that. So let's say I bought some Bitcoin today. Now understand that I have to have that idea. Okay, till when I am going to hold such things. If I'm going to hold till 1 year, if I'm going to sell it in next 6 months, okay, or in next 6 years. So always have an idea, because when you are buying BTC for the longer period, let's say you're buying BTC for the 1 year or 6 years, are you not blocking your funds? Are you blocking off, some of your funds in that BTC or the cryptocurrency? Yes. So that blocking or, that investing has an opportunity cost, for everyone. Why is this opportunity cost? Because in this, when you are, let's say I bought 1 lakh rupees BTC. I invested some rupees, 1 lakh rupees in BTC. Can I not do some various other things with these 1 lakh rupees instead of buying BTC? Right? Some other opportunity and I can grab, let's say I make it an FD for the next year. I might earn around 6%. Yes. So I'll be having the 6,000 rupees profit if I do a fixed deposit in my bank rather than buying BTC. So understand that whenever you are buying some security, even if it's like equity or cryptocurrency, understand that there is always an embedded opportunity cost. Okay, there is an embedded opportunity cost towards this 1 lakh rupees or towards your capital. Let's say it's 10 lakh. Let's say it's 1 crore. Doesn't matter. Whatever money you are investing into that thing has a very, very good opportunity cost. And you have to know what you need to compare. What you need to compare is the return. So let's say you are holding the BTC for the next 6 months or let's say 1 year. Okay, what you need to analyze technically is that the return that you're going to generate from this holding, is greater than any other alternate investment that you have. Let's say you are looking for FDs. So FD gives us a 6% return, or it's very less in the today's market, but let's say 6%. Or you're giving a loan to your friend, which is giving you 12% per annum as an interest. Or let's say you are investing in Nifty or another security, which is giving you 12 to 15% per annum. So what you need to do is to compare the holding period return. So when you are investing in BTC for the next 6 months or the next 1 year, you have to understand that you have to compare that same return with another alternate investment that you have for that money. See, the only way to grow money is to invest it. Everybody agrees with me or not? The only way to increase your money is to invest it. Yes, but that investment has so many alternatives. Yeah, so many alternatives in today's world. In your in your previous generation, like your mother or father's time, there was only one alternate, which was FD. Fixed deposits was giving you best returns all over the period. And there was some share market things, but there were so many irregularities in the share market that not everyone was supposed to enter in the share market, right? There are some only few blue chip companies, there were only so limited companies that were giving you good returns, right? So what you need to understand that in today's world you have ample of opportunities to actually invest in. Ample of opportunities. Okay, there is gold, there is silver, there are so many precious metals, there are so many precious stones, there is property, right? There is stock market, there is forex market, there is crypto market. There are so many alternatives in this world. But how do you analyze which security to buy is with the help of comparing those returns. If you're expecting that in 1 year the BTC return would be around 1000%, okay, will you think that in for this 1000%, will I be doing an FD for 6% per annum, or will I be investing in bitcoins? Come on, tell me. Will I be using a fixed deposit for 6% per annum, or will I be encouraging myself for 1000% return? Right, I'll be going for a BTC. Why? Because the volatility of the returns that we have seen in the past in the cryptocurrency market are very, very huge and multifold. Okay, they are multifold returns in the cryptocurrency market. No doubt that the cryptocurrency market has its bear run in the various in a various timeline. But doesn't every other market have a bear run? Tell me about the INR. Tell me about the currency. Tell me about the Nifty. Were they not, in the downtrend when the COVID came? Right. So every security has its own bull run and the bear run. That means that some securities are going to go for uptrend in some time, and in the same period simultaneously, some securities are going to go for downtrend. Right. But what we need to find is this: which securities are in uptrend, right? Which securities are going to increase in the further future? Only then I'm able to buy it or invest in. So for longer periods, like for months, you should use fundamental analysis to calculate the worth of security. So I told you like this: when you're participating in ICOs, or when you are, using 1 year or 2 year time frame network for your, investments, always focus more on fundamentals, because these fundamental things are going to, either crash the market or boom the market. Right now, the fundamentals of the securities in the cryptocurrency are not much strong. And that is why the period, that the returns were decreasing all over the world, not just in India. But the fundamentals of other securities like dollar, like Indian stock market, they were increasing on a various return, on a regular back, because their fundamentals were strong. So when you are looking for months or years, you should always know more about the fundamentals. But for shorter term trades, like for 1 minute or to maximum a week or even a month, you should analyze the instrument price technically. So 80% of your focus should be on the technical analysis when you're doing for intraday or swing trading. So as to know when to make an entry and when to make an exit. Okay, hope this is clear to you. So when you are, just to conclude in a nutshell, I'm telling you that if you're looking for long term, you should be focusing on fundamentals. But if you're looking for short term, because we have a very less capital, right? We are not millionaires by now, right? We are not millionaires by now. So we are not billionaires. So we have a very less capital. And to increase this less capital into a huge capital, you have to focus more on short term returns, which can give you some stagnant income as well, and also grow your network. Okay, so this is something that you have to understand, that when you are using such things, then you have to more and more focus on technicals. You should right now focus more on short-term trades rather than long-term investing. Even if you're long-term investing, do your savings apart. Let's say your income is 1 lakh rupees or 10,000 rupees. Okay, let's say your income is 10,000 rupees, or let's say it's 1 lakh rupees. How do you need to justify your income? Just put around 60% of your income into some long-term game. Okay, into some long-term game, and 40% you should risk in the short term, so that this 40% will give you huge returns. And this long-term investment will give you huge returns, but the time frame that you're looking from is very, very huge. Okay, it might take years to give you such a return which you're expecting. But it will actually, this short-term investment will be giving you results within some days or within some months or weeks, right? So understand that when you're doing, you're right now at this point of age, you should be looking for, around short-term trades as well. No doubt there is ample of opportunities for long-term investments, and there is ample of pros to do that. But there is nothing less. I know that there is much associated risk in the short term, but understand, where there is more risk, there is more return. So you can focus right now on, short-term trades from 1 minute to a maximum week or a month, and analyze the price charts technically. So now, are you ready to understand all of the basis of the technical analysis with me? Yeah, so we are going to have some strategic plans. So who's asking this question? We will be understanding all of this: risk management, trade planning, winning ratio, RR, risk rewards. We are going to do this technically all over the things. Okay, we are not going to skip any topic. We are not going to skip anything that might cause you any loss. So we'll be going through each and everything. Yeah, there is a shortage of time, so we'll be doing it a little bit fast, but I'll be covering the whole thing in this session and the coming sessions. So what are the types of traders that are that are participating in the market? So there are 4 major types of the traders. So let's start with the scalpers. Scalpers are the participants who enter into the trade and square up the same transaction within few minutes. So understand, when we are talking about the scalpers, okay, they are the participants who enter into any trade, square of the transaction within few minutes. So scalpers are the ones who are the very short-term investors, very least short-term investors or traders, because they are just trading in minutes. They are squaring off their position within minutes or within hours. Okay, so let's say I entered a trade at 6:15 a.m. I entered a trade at 6:15 a.m. And after making 1 or 2% return, I got out of the market at 6:17 a.m. It is possible. Okay, we are going to analyze such things, and these things are these persons who are doing such stuff are known as the scalpers. Understood? Next are the intraday traders. Okay, which we are going to major focus on the participants who enter into trade and instead of holding, square off their trades within the same day. So let's say I started trading at 9 a.m. and by the end of the market, like obviously this is a 24-hour market. So within the same day, let's say 8 p.m. I got out of my trade. Or let's say at around anywhere like between hours or something, holding like for a few minutes to some few hours, I'm an intraday trader. Then there are swing traders, who the participants who enter into trade and hold the same for 3 days to few weeks. So you know about the BTST strategies. What is the full form of BTST? It is buy today, sell tomorrow. Okay, so these strategies are major part of the swing traders. Then there comes the positional traders or investors who participates into the, who enters into the trade for and hold the same for at least 6 months. At least 6 months or even some years. Okay, they are known as the positional traders. So last time in the Bank Nifty internship, I gave example about the Zomato. What do you think when the people are investing in Zomato right now? Are these investors, swing traders, or intraday traders, or scalpers? Can anyone guess? Out of the four classifications, which of them they belong to? Positional trader. Okay, so when they are looking, because Zomato is a very, very new company. Okay, nobody wants to take risk for the very short term period. So they are doing what? They are buying and holding the same for at least 6 months or more, and they are known as a positional trader. Similarly, any new coin comes around. Let's say there is an ICO for a new XYZ coin. Okay, now there are specifications in the ICO that you have to hold, for such period. The coin cannot be sold like, let's say, for 3 months or 6 months period or even 2 years. Okay, there are some specifications in the ICO that happens, and these are the positional traders and investors, because they cannot liquidate their money, they cannot sell off their investments within these time frame, and that is why they are known as the positional. But when you are buying the BTC, at 6:15 or 6:20 a.m. and you are selling the same on, let's say, 7:15 a.m., then you are what? Then you are a scalper or an intraday trader. So basically we are going to do what? We are going to be focusing on intraday trading, so that we do not want to take risk or hold the risk for the next day. We are going to enter into the trade on the same day, and we are going to exit the trade on the same day, so that we can realize our returns. We can realize our returns on the same. So we are going to more focus on the technicals based on the intraday trades. Okay, so we are focusing on what? To be an intraday trader. Okay, so let's understand the small terminology of the price. Small terminology of the price. Long means a buying position. So whenever I'm saying that I'm going long on BTC, that means what? I am buying BTC. It's a very, very simple terms. When I'm saying I'm long on BTC, that means I'm in a buying position. Similar is the short. Short means selling position. Okay, so when I'm saying that I'm shorting Ethereum, right now I'm shorting Ethereum, that means I am selling it. Then there comes a short sell. Understand what happens. Let's say BTC price is running around 16 lakh rupees right now. Rupees 16 lakh right now. And you have analysis which says that in the coming days, let's say today is Monday, okay, and by this Friday, the BTC will reach to 10 lakh rupees, or it will decrease in price. Can I realize this profit? Okay, because the price is going to go down, I cannot buy, right? I cannot buy because the price is going to go down. So what can I do? What can I do to make this, this difference as my own profit? Is that even if I have no BTC, let's say I have no BTC holding right now. Okay, so short sell is something which our brokers give, a given advantage. What you can do is that, let's say my broker is Binance. Okay, this is me. Okay, and my analysis says that the BTC will move from 16 lakh rupees to 10 lakh rupees in the coming days. Okay, so it is this. So what I'll do is that I'll ask Binance, so lend me some BTC. So let's say I ask one BTC from Binance to give it to me for 1 week. Okay, let's say I ask the Binance to give one BTC to me for a few days. So what the Binance will do, that it will lend me one BTC. And now if I have one BTC, what I can do, I can short it. That means I can sell it, right? I'm selling the BTC. Now I sold this BTC on 16 lakh rupees. On Monday, when I ordered like from the BTC from the Binance, what I did, I sold the BTC at 16 lakh rupees. Now on Friday, because this was a loan, this BTC was a loan from Binance, I have to return that BTC to that company or to that broker. Okay, I have to return that BTC. So on Friday, what I'll do, I'll buy back this BTC from the market at rupees 10 lakh. Okay, I'll buy back this BTC at rupees 10 lakh and will return that BTC to whom? The Binance. Okay, so in this whole transaction, what I did, I sold this BTC which I took on loan of for rupees 16 lakh rupees, and then I bought it again. Okay, I bought it back again from the market at 10 lakh rupees and gave back to the Binance this whole BTC. So how did I do this? I sold the BTC in advance and then buy back it, and then returned my loan for the one BTC. But in this whole transaction, what I did, I made a 6 lakh rupees profit because of this transaction, because of this difference. Okay, I hope you have understood this thing. Usually Binance will give you a perpetual. So there is a perpetual, contract with Binance. So you can loan it from forever. You can loan the same BTC forever. Okay, these are not available in the Indian stock market. Indian stock market, you can short sell for only 1 day. Let's say I'm shorting Reliance. Okay, I have an analysis which says that right now the Reliance is at 2600 rupees, but by the end of the day, it will be at 2400 rupees. So what I'll do is that I'll ask my broker, let's say Zerodha, okay, to get to loan me some Reliance shares. So let's say I took 100 Reliance shares on loan from the Zerodha. I sold it at what? 2600 rupees. I sold it at what? 2600 rupees. And by the end of the day, I have to buy back this these 100 shares at 2400 rupees. Right. So I made a profit of around 200 per share. And once I buy back, what I'll do, I'll give it back to the broker. Okay. All of you understood this transaction, or still there is some query? How I short sell in the market and how can we realize the profits from the market because of short selling? Okay, I'll just give you a repetition. Let's say on Sunday. Okay, right now the price of Bitcoin is 19 lakh rupees. Is right now 1 BTC is equal to 19 lakh rupees. I am having an analysis that by this week, let's say on Friday, next week, the BTC will go to 16 lakh rupees. So I know that this difference of 3 lakh rupees will be there in the price. But right now I have no holding of this BTC. I have no holding of BTC. I have 0 BTC in my wallet. So what I'll do to realize this profit, I will ask my broker, let's say Binance, to give me 1 BTC on loan. So I will loan 1 BTC from Binance. Once I get this BTC in my wallet, I'll sell it. I'll sell it in advance and I will receive 19 lakh rupees in payment. Okay, understood till here? Okay, then on Friday, what happened in the Friday that yes, the price actually reached to 16 lakh rupees. So what I'll do on Friday, I'll buy back 1 BTC, okay, from the market at 16 lakh rupees. So my buying price is 16 lakh rupees. My selling price is 19 lakh rupees. Did I make any profit? Yes. So when I'm buying back this BTC, I just have to pay 16 lakh rupees to the seller. I have to pay 16 lakh rupees to the seller. Okay. And once I, buy back this BTC, I will return to this to what? To Binance only, because I have loaned this BTC from Binance. Okay. And what I will realize is this, the difference of the prices of the buying and selling. So I'll make around 3 lakh rupees profit because of this. Understood with this transaction? Now the risk of short selling. There is one thing, risk of short selling. Let's say on Monday, I have an analysis that the price of the BTC will go down. So it is right now at 19 lakh rupees. And till Friday, I am assuming that the price will go around 16 lakh rupees again. I went to my broker, Binance, and asked him to loan me 1 BTC. I sold the same BTC on Monday and received rupees 19 lakh in payment. But on Friday, what did happen? That the price went to 22 lakh rupees. The price, increased and it went to 22 lakh rupees. Now, what will I have to do? I have to return this BTC to Binance, obviously. So I have to buy this BTC at 22 lakh rupees from the market. Okay. Because I have to do what? I have to clear up my loan with my broker. So I have to buy this, BTC at the same 22 lakh rupees and will return it. So my net cash flow from here will be minus 3 lakh rupees. That means that I have to pay this 3 lakh rupees from my own pocket. Understood? And that is one of the major risks in short selling. I hope this is clear to all of you. Why short selling is risky? See, understand, we are going to do some short selling as well. We are going to go long as well. But when you're short selling in cryptocurrency, because of the huge volatility, because of the huge price difference, okay, there can be huge losses as well. And that is what we will learn in the future, in the coming sessions, how to manage this risk. Okay, how to manage this risk. Can this risk be mitigated, or can I manage this risk? Yes, I can manage it. I know that there is risk associated with the buying as well, because the price can go down in the future. There is a risk associated with the shorting as well, because the price can increase in the future. But the medicine for this risk is to manage it. And when we will having a risk management class, then you will understand how will I manage my risk, how will I control my position sizing, so that I cannot, let's say I'm taking a risk of ₹1,000 on a single trade. Okay, let's say I'm taking a risk of ₹1,000 on a single trade. Yes, you can control your risk. Let's say I'm taking a 10,000 rupees risk. So it's upon you how much risk you want to take. But what you need to understand is the risk management. How do we manage this risk? How do we manage our position size? So we'll be doing this in the coming sessions of the risk management. So I hope you are clear with these three terms. Now, one of the most important thing is a stop loss. Now understand one of the transactions. On Monday, I bought one BTC at let's say 19 lakh rupees. So I will have to pay 19 lakh rupees to the seller. Now, what is my expectation as a buyer? Why am I buying this BTC? What is my expectation? Can anyone tell me? My expectation as a buyer is that the price will increase in the coming future, right? That the price will increase in the coming future. However, let's say on Friday, what did happen? The price went to 16 lakh rupees. Now tell me, is there any profit or loss? So I'll be incurring a loss of rupees 3 lakh, but I don't want to do it. I cannot afford a 3 lakh rupees loss. I can afford maximum of 30, let's say 1 lakh rupees. I can afford a maximum loss of 1 lakh rupees on a single trade, not more than that. So what I'll do is that I will put up a stop loss. I will put up a stop loss at 18 lakh rupees. That means if the price of the BTC went down to 18 lakh rupees, my broker or my software will automatically exit my position at 18 lakh rupees. So you don't have to do any such thing from your own side. Just have to put this SL on the correct price. And what will the software do? The software will exit your position at 18 lakh rupees. So now my whole loss will be only 1 lakh. Understood? Now, one principle you have to understand about the SL. This is one of the easiest term that you can understand what is your stop loss. That is, SL is what? The price I will exit, right? The price I will exit if my trade goes negative. Understood? Everyone agrees with me? The price level I will exit if my trade goes negative. SL is this. 90% of the traders who have lost enough or more than in the market is because they do not put SL over their trades. You might have heard so many familiar things like your friend or your family friend or your dad's family friend or your uncle has lost a lot in the market, right? Why did this happen? Because initially or even now the traders don't use SL. You might have heard like my paternal uncle has made a loss of around 20 lakh rupees. My maternal uncle has made a loss of around 19 to 50 lakh rupees, right? These are the amounts which we have heard. But why does such things happen? Because they do not get out of the market when the price goes negative. They do not put their stop losses. And this is one of the main reasons that major 90% of your traders have lost around 100% of their capital in markets. Okay, so understand that it is very, very important for you to put up a stop loss. If you are trading without a stop loss, no person or not even God can help you from making losses. So trading can only be, you will be trading or you will be doing intraday trades based on your stop loss only. If you are not putting up your SL, that means what? You are risking 100% of your capital. Am I right or not? If you're not putting a stop loss, that means you're risking 100% of your capital. And this is not even stupidity. This is a disease. This is a disease which many traders have of not accepting their losses, and they will just continue. Because why people don't do stop losses? Let's say I bought BTC at 19 lakh. Now it is around 16 lakh, right? So what I will see in my position is minus 3 lakh. And what my mind or my emotions will say that, don't exit your trade. It might go up now. It might go up now. We cannot accept this loss. We cannot accept this loss. And what does happen? The price moves to 5 lakh. So if you do not want to do emotional trading, if you do not want your emotions to come across, always put a stop loss. Yes, you're all right. They don't want to accept the responsibility because of regret and hope. So you all understood such things. Okay, you all know about such things. But it is very important, and you are not going to trade. As if you respect me as your teacher, I am going to advise you one thing only in life: never trade without stop loss. And if you can, apply this thing in your life, I can assure you, you will be one of a hefty profitable trade, not just profitable trader, hefty profitable trade. So you are not never ever going to trade without a stop loss. Otherwise, don't do trading. Trading is not for you if you are not putting up your stop loss. Okay. So the last term is the target price. So what is the target price? That is, I want, if I have analysis that the price will go to, from 19 lakh to 22 lakh rupees, and I'm buying it. That means 22 lakh rupees is my target price. Understood? Hope this is easy. Why we use target price? Okay, that's a good question. So understand. The price movement is like this, right? You have no idea. You have no idea. Nobody on earth can tell you where is the last price that the price can go till above side, or the price can reverse from this level, right? So let's say you have bought Bitcoin at 19 lakh rupees and the price is moving on and on and on, right? If you do not have a target price in your mind, let's say 22 lakh rupees over here, what will you hope? That the price is increasing. So let my profits run. Let my profits run, right? Because of that hope, another 2% of the failure traders have lost their 100% capital, because they have a notion, they have a hope that the price will increase, or increase and increase and increase. And what does happen? Price will make a swing towards the downside and will go downside. All you will be losing is your, if you're not putting up your target, you will be losing all your profits, which you can realize. But also you will be losing, once this profit is going downside, you will also be losing your capital. And that is why it is very, very important for you to put up a target price. You will not assume any price level. Okay, you will not just open your trade. Let's say I opened my trade at 19 lakh. I bought some Bitcoins at 19 lakh rupees and I will let it run. Okay, let the future handle what is there for me. Let the future unfold for me. This is not a emotional trading. You have to have a target price. You have to have a stop loss. Okay, so I hope this is all clear to you. So types of chart. Okay, one of the very important thing in this technical analysis are the types of chart that are available to you. So this is how a line chart looks like. Okay, if the price is going upside, the line will go upside because this line is representing the closing price. This is connecting all the closing price. So how is the line chart is representing itself? Let's say today, Monday, the price is 19 lakh. On Tuesday, the price is 20 lakh. On Wednesday, the price is 21 lakh. On Thursday, the price is 18 lakh. So how will the price chart will go? 19, 20, 21, and then down 18. Right? So it will be connecting what? It will be connecting all the close prices. Understood? The bar chart and the candlestick chart are very similar in the formation of their nature. So let's say, okay, let's give an example. Let's say on the open of the day, let's say at 9 a.m. today, let's say the market opens at 9 a.m. because it's a 24-hour market. So let's say our market, it's an example. Okay, the market will run 24 hours a day. Let's say on 9 a.m. the price is right now at 100 rupees of any other security. Let's say any XYZ coin we are talking about. The price is at 100. What did happen in the around 12 p.m.? The price went above to 120. The price went above to 120. And let's say our market closes, let's take an example of equity only. So let's say our market closes at 3. Okay, at 1:30 p.m., after 12 p.m., at 1:30 p.m., the price started going downside and was around 80 rupees. But by 3 p.m., our price is again at, let's say, at 100 rupees. Oh, no, not 100. So how this bar chart or this candlestick will be made? So tell me, this is my open price, right? This is my highest price of the day. This is my lowest price of the day. And this is the closing price. Are you understanding these 4 things? I write it down over here. Are you able to understand this thing? Open, high, low, close. And this is also known as the OHLC concept. The open, high, low, close. Okay. So at 9 a.m., the open price was at 100. Okay, it started going increasing and made a high of 120. Once the price reached at 120, it started going down, and around 130, it went to a low of 80 rupees. From 130, the price started increasing and closed at 110. Now tell me, if I compare these two, the open and the close price for the day, am I having a positive or a negative price or increase? Am I having a positive movement or a negative movement in this day? Positive, right? How did you get this? By comparing the closing price minus the opening price. So it will say that the price is 10 rupees positive. Understood? The price went 10 rupees positive. So the positive day will always be, denoted by a green bar or a green candle. That means on that day, the price has increased. Similarly, if there is a red bar or a red candle, what will it show? A negative closing in the price. That means For that day, the price, had gone to down. The price had decreased. Okay, so that means green means positive, the red means negative. Okay, and if the price has increased for the day, then it will be a green candle, and if the price has decreased for the day, then there will be a red candle. So in the same example, let's say a green bar or a green candle, how will it make? This bar, this first thing is my open price, which started at 100 rupees. So we had, in the same example, we started at 100 rupees. Okay, so at 9 a.m., my open price was around 100 rupees. The price started going upside and went up to a high of what? 120 rupees. Then price started going downside and made a low of what? 80 rupees. And then price started going above and then closed around 110. This was my example, right? So now you understood how this bar or a candle will be made. So in the same example, if I'm making the candle, what will happen? So in this, let's take this example on the green candle. My open price was what? 100 rupees. So this lower green candle, lower thing of the green candle, lower opening of the body will show me the open price, 100 rupees. Then the price started moving upside and made a high, and this wick will show you the high of 120 rupees. And the price started decreasing and made a low of what? 80 rupees. Then price started increasing and closed around what? 110. Understood how the candle or a bar chart is made? So let's move on to the next slide. Now, the candlesticks. Out of all the charts, we are going to use the candlestick chart mostly. See, every other trader has a different perspective. Some use bar charts, some use Fibonacci charts. Okay, but majority of the traders use the candlestick chart. So once we are understanding the candlestick chart, what we are learning over here, the candlesticks are the reflections of the decisions of buyers and sellers. Okay, whatever the decisions the buyers and sellers see, who are the two participants of the market? Who are the two participants of any financial market related to crypto, forex, or stock? They are buyers and sellers, right? If the price is increasing, who are actually winning? The buyers are winning, right? And if the price is decreasing, who are winning? The sellers are winning. Okay, so candlesticks are basically the reflections of the decisions of the buyers and sellers. Whatever the decisions in the whole day they have taken, the major buying and selling is denoted by a single candle. So if the price has decreased for the whole day, that means the seller dominated the whole day, right? And that is why the price decreased. See, understand why does the price decrease and why does the price increase? When the sellers are selling in huge quantities, the price will decrease, obviously. And when the buyers are buying in huge quantities, price will increase. This is very much clear to you. Why does the price increase or decrease? Yes. So I can say that when the sellers are selling in huge volumes, that means that the price is going to decrease. And similarly, when the buyers are actually buying in huge quantities, that means the price are going to increase for the day. Now, when there is a formation of the red candle for the day, that means what? There was a huge selling in the market. And similarly, when there is a green candle formation for the day, that means there was a huge buying in the market, right? So can I say that the candlesticks are the reflections of the decisions of the buyers and sellers for the whole day, right? Now, it has four ends. Like we discussed in the previous slide, it has four ends, the OHLC. That means open, high, low, close. The open, high, low, close. So if it is a red candle, what is the difference? If it is a red candle, the open price will be, at the higher level. If it is green candle, the open price will be at this level. Okay, this is the only difference. And the closing price of a red candle will be below, and the closing of the green candle will be at a higher level. The wick. The top of the wick shows the highest price it reached. The bottom of the wick shows the lowest price it reached. As we discussed in the previous example, when the price made a high of 120, that means this 120 will be shown by which? The upper wick. So this is known as what? Upper wick of the price, upper wick of the candle. Similarly, this is known as what? The lower wick of the candle. Okay, the lower wick of the candle, which will show the lowest price that it reached towards the day, which is 80 rupees an example. Okay, the body. The candles are distinguished on the basis of the color of their body. Red body candle represents that the price decreased in the price. There was a decrease in the price, while the green body candle shows that there was an increase in the price of the currency. Are you understood with like this whole candle thing? See, in the next sessions or whatever we are trying to trade the setup, it will all be based on candlesticks charts or based on candlesticks. And that is why we have to study these candlesticks vigorously and in detailed manner as much as we want. Majority of the traders are using the candlestick chart. Yeah, we will be discussing about the doji as well. Okay, what are the different types of the candlestick that we will learn through. So understand, in the coming sessions, you have to be very much attentive, because out of these candlesticks, I'll be telling you a lot of things, from where to take a decision, from where to actually buy, from where to actually sell. will all be based on these candlesticks only. And it is very, very important for you to understand the formation of the candlesticks. So I hope you are clear with the formation of the candlesticks. That's great. So we are going to end the session over here till today. In the next session, we are going to do some patterns. Also in the next session, we are going to do with the strategy as well. Okay, how we are going to analyze how the price is increasing, when is the price going to decrease, and how can we know in advance what is the price action in future. See, understand that the price action, okay, price action is nothing but the language of the price. So let's say when I'm speaking in English or when I'm speaking in Hindi, I'm able to communicate you, right? You're able to understand my words. Similarly, price action is the language which actually shows you, which communicates you the direction of the price. If you know in advance that the price is going to go, upside, it is going to go upside, then won't you buy? Tell me. If you know in advance that the price is going to go upside in the future, won't you buy? Similarly, if we know in advance that the price is going to go decrease in the future or going to go low in the future, won't we short sell or sell? Yes. So this is everything that we are going to cover in the next session. How to analyze the price action, how to read the candlesticks. But understand, these candlesticks are the alphabets of that price language. In English, there are 26 alphabets, right? Because of these alphabets, we are able to make a language, we are able to make some words. Because of those words, we are able to make some sentences. And because of those sentences, we are able to make some paragraphs. Similarly, if I tell you that the price action language, these candlesticks are the alphabets of that price action language. And that is why we have to understand each and every alphabet so that we can know how to use those alphabets to make some words and how to use those words to make some paragraphs or sentences. Understood why we are going through this candlestick in a very, very detailed manner? Okay. So if you have any question by now, you can ask me. Otherwise, we are going to continue in the next session. So till then, bye-bye. Have your evening very well. Take care, everyone.